Hey investors, Kylie here. So if you're new to investing in the stock market, you're probably still working out how to stay on top of all your investments. You know how it is, you start with one stock and the next minute you have a whole portfolio of stocks and ETFs from right around the world, and suddenly it gets a whole lot more complicated. Yeah, it's a thing. And the thing is, this can all become even more complicated when it comes to tax time. Something for all you new investors to look forward to. But it doesn't have to be that hard. So in this video, I'm going to run over a few tips on how you can better keep track of and organize your stock portfolio like a pro. And just a heads up, this video is being sponsored by CMC Markets. It's an online share trading platform, and it actually got the #1 award for best overall broker in Australia. If you're interested in checking out the platform and giving it a go yourself, there's a link in the description below. So tip number 1, use portfolio tracking software, which includes tax tracking. The best thing you can do is to find a good portfolio tracker. Portfolio apps and software help you to keep your stock holdings and other types of investments organized. In case you haven't noticed, it can be tricky to track exactly how much money you're actually making through your investments. Recording your capital gains, dividends, and total returns minus your costs isn't as straightforward as you'd think it would be. And online brokers don't always make this easy. Depending on the platform you use, you might get daily percentage returns or your overall returns, but even then it can get messy if you're trading a stock or ETF regularly. So portfolio trackers record all buy and sell orders along with the associated prices and any dividend payments, which is crucial when it comes to reporting your profit and loss statement at tax time. Some brokers will have these features built in. For example, the share trading platform CMC Markets, who is the sponsor of this video, has partnered with the portfolio tracker ShareSite. It's a super popular tracker here in Australia. You can track the first 10 stocks for free, plus if you're an advanced trader, you get zero integration, future income reporting, and capital gains tax modeling, which is a great add-on if you're an active trader. Other popular portfolio trackers include InvestSmart, Stocklight, Kubera, and Navexa. Okay, tip number 2, track company announcements and earnings reports. Companies regularly share updates to their investors, and these updates can have a very big impact on the share price. One of the most important announcements are earnings reports. Typically, these are released twice a year, and they show company financials like profit and loss numbers, as well as product updates and company changes. Other typical announcements are leadership changes, expansion plans, M&A, and any major business updates. Luckily, listed companies must share these reports in a public forum. In Australia, all company updates that could have an impact on prices are published by the Australian Securities Exchange. To make it easier, some online brokers also have a feed of updates and announcements on their platforms. So this means you can specify which companies you want to see announcements from. And you can even filter news that is price sensitive. Okay, tip number 3, keep a watch list and set alerts. Watchlist tools let you create a list of stocks that you want to keep an eye on. These might be companies that you already own or companies that you're interested in owning at some stage. Some brokers let you create watch lists on their platforms. Otherwise, you can download any number of watchlist apps on your phone or desktop. These watch lists typically let you set alerts for when a stock is trending upwards or downwards, and you can usually set the price level where you want to get the alert. You can set an alert for that and then make a call on whether you want to buy. Okay, tip number 4 is track dividend payments. I love dividend stocks. Some companies pay a portion of their profits out to shareholders in the form of dividends. These are usually paid out twice a year, and it pays to track not only when they'll be paid out, but also if they're going to get paid out at all. Dividend companies make a call every 6 months or so on whether it will be paying the next due dividend and how much it's offering. It's important to keep track of these dates and numbers because a company whose dividend might have been trending downward could be a sign the share price is also going to trend downward as investors look for higher paying options. Plus, you can expect to see some price volatility around both the dividend announcements as well as the days leading up to the actual payment. So it always pays to be aware if you're planning to buy in or sell out. Okay, number 5, reevaluate your investment plan. Even if you're a long-term investor, it pays to check in on your portfolio at least every 6 to 12 months. This is so you can make sure that your portfolio is still in line with your overall strategy. Depending on what's happening in the economy, like say COVID-19, your portfolio might need adjusting. For example, you might want to take advantage of a market downturn or a bull market by resetting your price alerts and reevaluating the stocks you currently hold. If you're an active trader, tools like technical analysis charts, stock or sector analysis features, And a news feed can be great for evaluating whether the stocks in your portfolio are still on track to meet your goals, or, whether you need to switch a few out. Not all brokers offer these tools. CMC is one broker that offers a range of stock analysis tools, like this one that lets you compare any one stock against the broader market. Plus there's research from Morningstar, historical data, and risk ratings. So those were 5 tips on how you can better track that growing list of stocks in your portfolio. Regardless of whether you're a long-term investor, active trader, or you prefer ETFs, having the right tools to stay on top of your holdings can make a world of difference and give you better clarity over what your next move should be. And if you want to find out more about trading tools and the online brokers that offer them, there are links in the description below. And again, if you're interested in checking out our sponsor, CMC Markets, and trying out some of those tools for yourself, you can sign up in the link below. That's it from me. Don't forget to hit the like and subscribe button for more videos like this, and feel free to leave comments. Thanks, guys.